June 19th, 2022. Happy Father's Day, everyone. I'm going to hit you guys off with 3 videos. Pretty important videos, and they pertain to what's going on in the market right now. Some people have asked me, why I don't make more videos. Remember, I'm not an entertainer. I'm a trader. I don't get paid on YouTube. I don't get paid on Twitter. I don't get paid on Reddit. I don't ask you guys for likes. I don't ask you guys to follow. I don't ask you guys to tell other people. With that, I don't mind, because I'm not looking for a little bit of money. I'm not looking for subscribers. I'm not looking to make a couple of $1,000s a month. If I can make $500,000 a year, I am interested. But if I'm getting views and I have like 500 followers on YouTube, not even, maybe 470, I'm not here for a couple $100 or a couple $1,000. So I have an elite group on Reddit. They see my trades before I trade. I have roughly 25 members at the moment, and they donate roughly about $50 a month to me. I'm not looking for $1,000 a month. I'm looking for big money like 15, 20,000 a month. So don't worry about that. Remember, I'm not an entertainer. I'm a trader. I'm going to hit you off with 3 videos. They're all important. So the first one, because right now we're in a tightening environment. So last time I made videos about a month ago. I had a video about the recession, how we're entering the recession. So I made a big post on Reddit about the tightening cycle and why you do not want to go against the Fed, because it's the first time since the year 2000 that we even got a half a point rate hike. Now, about a week ago, a little bit more than a week ago, we had CPI numbers of 8.6, which was higher than any other CPI numbers in 2022 and has been the highest since 1980. So what does that mean? The data has gotten worse. The Fed has no choice but to raise rates. Now, a lot of people are saying, what the Fed does not affect supply. That is correct. But when the cost of money increases, that kills demand. So despite what they're trying to tell you on TV, I'm here to tell you they are wrong. And unfortunately, you do not want to go against the Fed. People on social media, people on Reddit, they are wrong. I'm not saying maybe, I am telling you they are wrong. If the Fed wanted to go to 5%, they will halt demand of 60 or 70% of the economy, because the average consumer makes up 60 to 70% of the economy, not the rich people. So when you make money expensive to borrow, loans go up, mortgages go up, credit card rates go up, and it costs more money to borrow money. So majority of people are living paycheck to paycheck. I don't know why they say on TV that savings are up. Savings are up because you're including the rich people, not the average person that's dying with these gas prices. So as I said, in February, if we have 2 straight months, only 2 straight months of insanely high gas prices, I told you back in February on video that we are going into recession. So right now it's June 19th. The end of the second quarter is June 30th. In July, we will get a GDP for the second quarter. First quarter, negative 1.4. We were expected to grow 1%. This quarter, we're expected to grow 0.9. We are probably getting negative. 2 straight quarters is a recession. I did that video last month. This video is very important because in the year 2000, the beginning of 1999, we had a Fed funds rate a little bit below 4%. By the end of 2000, we were at 7%. So what is that? Approximately 3%. January of 2022, we had a Fed fund rate of 0.125. Let's just call it a quarter. So we had it at a quarter. Right now, we're at 1.75. Also, in the beginning of the year, the target Fed funds rate from the Fed was about 1.5 to 1.75. Powell just said this past week, target is 3.4. So if we're at 1.75, his target is going to double what it is now, approximately 3.4, and we're at 1.75. But the big thing is here, we started the year at 0.25. So if he raises it that high, it's over 3%. Do not go against the Fed. When the Fed is raising rates, it's costing more and more money to borrow money. The cost of cash is going higher. So if you're in companies that don't make cash, how are they going to stay in business? The only way they stay in business is bonds. Bonds where they borrow money and the rates are much higher now. Or they sell stock shares into the public. So do not go against the Fed. So even if you're profitable, unfortunately, most of our companies that are public borrow money. So if they're borrowing money too, and we're not here to pay principal. So what happens is every 6 months of the year, they refi. They get a new bond. They pay off the bond and get a new bond because that's the American way. Don't pay the principal, just keep paying interest. So if they were new every 6 months in a year, mortgage rates in January were 3%. Now they're 6%. I just closed on 2 properties on Friday, commercial loan, and I locked in a 5.76. Terrible. Absolutely terrible. People are asking me if I want to borrow money. I'm saying it's too expensive. I don't even want to buy more properties until the pricing on the properties go down. The prices are high right now and the rates are high. So no way. So I'm saying if you were buying stocks of companies losing money, you were going against the Fed. If you were buying stocks of even companies that are making money, their margins are getting lower. The margins are already getting lower because supply chain issues, inflation, wage increases. Now, just like I said, every company is borrowing money, so they have interest expense. That's why there's EBITDA, earnings before interest, because it's huge because our companies borrow. So what does that mean? That means that your profitable, even your profitable companies are going to make less money. So don't go against the Fed. If you go against the Fed and you look it up in a tightening cycle, and a tightening cycle is considered like 4 rate hikes of 0.25 for 1% within a year. We're about to go from 0.25 to 3.5 in 1 year. So this is a super tightening cycle that came after the pandemic where just money was being printed. People were being paid $1,000 to stay home and getting stimulus money, and rates were so low, everyone was borrowing. So if you go against the Fed and buy stocks during a tightening cycle, you are taking a big risk. So good luck to you. That post that I posted last week at Ultimate Traders on Reddit, very, very important. All right, good luck.